This rapid repatriation of gold and silver that we are seeing is suggesting a very big strategic shift. I would not look past that, Jesse. I think what we are seeing right now is so far outside, you want to call it an outlier, it is so far outside of anything I've ever seen in my career. And the interesting thing about it is that on the American retail public is completely asleep at the switch. The market is being driven by central banks right now. And central banks are the ones that write the playbook. They are most well-informed traders in the world. And the American public is stuck in this Nvidia, Bitcoin, Apple risk-on trade. I don't think we've even begun to see the fallout of what would happen if we see some sort of a market crash, because you have everyone in a handful of 7 stocks. You got everyone in Bitcoin, and yet the biggest money in the world is buying physical commodities hand over fist and repatriating them, taking possession. That it's not an inflation trade. It's a chaos trade. People are afraid. It's uncertainty. They're buying gold and silver and taking possession of it because something's coming. And they don't do those kinds of things at that level just for the hell of it. They don't reclassify gold as the only tier 1 asset in the world. They don't repatriate all their gold from the Bank of England and the New York Fed. They don't bring it all home to the COMEX. They don't do all of these things. You don't see JP Morgan now move to holding GLD and SLV if it weren't something bigger coming. In my opinion, I just simply think that this is being largely ignored by the American public. It is being hyper-driven by the most knowledgeable, well-funded, and well-informed traders on the planet. To me, there's a story that I think you and I will pick back up on here, maybe in a few months, that will see gold and silver at levels that people are shocked by. And that's exactly how it works. You know, the big money always is positioned before the little guy even figures it out. And here we are at $3,000 gold and not a damn word from the media. People are sleeping at the switch. Rick Rule will tell you 0.5% allocation to precious metals from Joe and Jane Sixpack to the Harvard Endowment Fund. So as gold and silver, I mean, if you would have told me in my career, most of which when gold was under $400, I've been doing this for 35 years, that gold would be at $3,000 and the public is asleep at the switch, the lowest premiums I've ever seen, ever, on gold and silver coins because the public isn't participating in it. I mean, they were wildly in it during the pandemic. And then Trump coming back to reestablish our culture has made everyone turn a blind eye to the monetary side of things. And that's a problem. And everyone is overloaded into a handful of stocks in a banking system that is massively over-leveraged and undercapitalized, and haven't seen the end of that story yet either. I think this will be a very interesting year. I think it will be the best year ever for gold and silver. And the sad part is it's being largely ignored by the American public, who is all crammed into the risk-on trade, maybe at a time when they should be looking elsewhere, because the biggest money in the world is doing just that, and they're always the ones that lead the crowd. So I guess only time will tell, and maybe I'm stupid for publicly saying these things if that's how I feel, but honest to God, Jesse, in my heart, I feel that there's something way bigger than meets the eye happening with gold and silver. And I do believe when you get the Treasury Secretary who says it's his largest holding, that being gold, when you get Judy Shelton says we're going to peg it to gold 50-year treasuries, when you see it all flowing home, when you see the biggest Western cartel bank holding it all in the form of ETFs, where they could take the ETFs on a Friday night and be sitting on the largest stockpile of silver in the world on top of what they already own and one of the largest of gold, and say, well, what? We didn't break any laws. You can still own physical gold. That money that was in GLD, well, now it's in your money market account. Go buy physical gold from Miles Franklin. Go feel free to do that. Buy from the U.S. Mint.
The rapid repatriation of gold and silver that we are seeing is not just a random market event. It's a monumental signal of a strategic shift unfolding before our very eyes. This isn't business as usual. It's a red flag, an alarm. And sadly, most of the American public is too distracted by tech stocks, crypto hype, in political theater to notice. The central banks, the real players, the ones who write the rules of the financial game, are stacking metal with intensity, not just as a hedge against inflation, but as a declaration of uncertainty, of distrust, of what's coming next. And the retail investor, God bless them, is asleep at the wheel, more focused on Nvidia stock than on the most honest money known to man. You want to talk about bubbles? You want to talk about systemic risk? Start with the fact that the average investor thinks Apple and Bitcoin are safe havens. Think about this. Since November, The United States has flipped from a net exporter to a net importer of gold. That's not a small data point. That's a total reversal in flow. We're talking about over 12 million ounces of gold and over 45 million ounces of silver flowing from London vaults into American ones. These aren't your everyday reallocations. This is a gold and silver tsunami quietly crashing into the United States. Why now? Why the urgency to bring this metal home? It's not just logistics, it's preparation. This isn't about short-term market volatility, it's about geopolitical risk, a coming monetary reset, and a growing awareness that trust in fiat currency is evaporating like mist in the sun. While everyone's checking their Robinhood accounts and posting about meme coins on social media, the biggest money in the world is preparing for impact. Meanwhile, the institutions that once openly suppressed gold prices through derivative games are now positioning themselves as the primary gatekeepers of precious metal ownership. JP Morgan, for instance, an institution previously fined nearly $1 billion for manipulating the metals market, is now holding the keys to both GLD and SLV, the largest gold and silver ETFs on the planet. Let that sink in. The fox isn't just guarding the henhouse, it's running the henhouse and rewriting the rulebook. If there were ever a modern-day Wall Street-style version of confiscation, this would be it. A simple Friday afternoon statement. Due to systemic volatility, all GLD and SLV redemptions are suspended. Your assets have been converted to cash and placed in a dollar-denominated account. Not illegal, not dramatic, just a quiet, legal rug pull. And still, the public sleeps. The mainstream financial media doesn't whisper a word. You'd think with gold inching closer to $3,000 an ounce, it would be front-page news. But there's a reason it isn't. Attention breeds curiosity, and curiosity leads to action. And let's face it, Wall Street doesn't want people running toward physical metal. They want you all in on passive index funds and digital fantasies. Because the truth is, when this monetary house of cards starts to shake, those holding physical gold and silver aren't just protecting themselves. They're walking away with their sovereignty intact. There's something poetic about that. In a world built on debt, manipulation, and leverage, the most boring asset, the one that doesn't yield anything, doesn't promise growth, and doesn't market itself with flashy buzzwords, ends up being the most powerful. The only monetary asset that is no one's liability. And while Wall Street plays hot potato with tech stocks, the smart money is quietly circling the wagons. They're de-dollarizing, decentralizing, and preparing for the day when paper promises are worth just that, paper. So if you're sitting on the sidelines wondering if you've missed the boat, let me assure you, the boat hasn't even left the dock yet, but the captain is getting ready. And the ones already on board, they're not looking for the next 10x play. They're looking to survive the storm, to protect their families, their wealth, their legacy. And if you're still thinking of gold as a trade, a way to make a few bucks on the upside, you're missing the point. This isn't about profits. It's about preservation. It's about peace of mind in a world spinning out of control. Gold isn't rising because it's exciting. It's rising because the truth is becoming impossible to hide. The only question is, when will you stop chasing distractions and start protecting yourself with real money? Because when this storm hits, it'll be too late to buy an umbrella.
My point is all of these things are setting up for something much bigger than I think people are betting on. And my money is on gold and silver reaching levels. And again, I think it'll reach levels that no one dreams of, but that's not why you own it. You don't own it to get wealthy. You own it because it is wealth that has outstood 2 world wars, German hyperinflation, the Great Depression, every single pandemic. And what did he do? What did he do, Roosevelt? Well, his first act in office in April of 1933 was to confiscate gold. Okay. But why? Because he paid everyone $20.55 for their $20 gold coin. 55 cents was a lot of money in 1933. Everyone was happy. And then he devalued the dollar by 40%. Just like that. And now gold was up 40%. Same thing was true in 1971 when they closed the gold window at 35 bucks an ounce. The market revalued gold. Market revalued gold to where it is now at 2,900. Well, what if they just decide to revalue gold that is held on their balance sheet at $42 an ounce in the United States and $35 in every other country, and bang, It's $5,000 an ounce. Well, what does that do? Well, that just gave $1.25 trillion free and clear to the Treasury. What if they make it 10,000 an ounce? Well, that just gave $2.5 trillion to the Treasury. How about 145,000 an ounce? Well, now your balance sheet is completely pristine, offsetting by assets and liabilities. What did Bissett just say? Scott Bissett, we are going to monetize the asset side of the U.S. balance sheet. Well, what assets do we have? 5 trillion plus in assets. The largest being student debt. Well, they're not going to monetize that. The second largest being military. Not going to monetize that. How about land and gold? Oh, maybe. Sure. Why not? Well, what is he talking about by monetizing the asset side of the balance sheet? Do you see the clues that they're giving you? It's his largest asset. That is gold. He admits to it, that the new Treasury Secretary. My guess is, Jesse, there's a whole hell of a lot more in store for what gold and silver represent to this new administration rather than an investment to all you all. No, it's going to be a lifeline to reestablishing confidence and trust in the West. And it's the only way to do it, in my opinion. So we'll see if I'm right. Either way, I always speak my heart. I mean it. And I look at gold and silver as wealth, not an investment. And I think that's going to bear fruit here in the actions of this new administration.
I think the most dangerous part of this whole setup is not just the monetary shift that's taking place, it's the psychological complacency that's been deliberately engineered. We've got the most significant reallocation of hard money, gold and silver, happening under our noses, but the average American thinks it's just another Tuesday. And who can blame them, really? The media is silent, the Fed gives carefully worded reassurances, and Wall Street keeps dangling shiny objects like AI stocks and crypto surges in front of them. It's classic misdirection. Keep the herd calm while the shepherds quietly move their own flock to safer ground. But the people moving to safety right now are not your average investors. They're the most powerful financial entities on the planet. These aren't hedge fund managers trying to beat the S&P. These are central banks, sovereign wealth funds, and global institutions with decades, even centuries of experience navigating systemic upheavals. And they are making the move, Jesse. They're taking delivery, they're pulling metal out of ETFs, they're draining the London vaults, they're shipping metal back to their home countries. This isn't about speculation, this is about control, sovereignty, and insurance against what they know is coming. Let's step back and look at the big picture. Why gold? Why now? What does gold represent at this stage? The answer is simple. Gold is the only monetary asset on the planet that is no one else's liability. When you hold a treasury bond, you hold a claim on future tax revenue. When you hold a bank deposit, you hold a claim on a bank that might go insolvent. When you hold gold, you hold final settlement. It doesn't matter what the market's doing, who's president, or what interest rates are. Gold just is. And in an environment where trust is evaporating, that kind of certainty is priceless. We've seen these cycles before, haven't we? History repeats, or at least it rhymes. Go back to 1933. Roosevelt knew the system was fragile. The dollar was on the ropes. So what did he do? He confiscated gold from the American public at $20.67 an ounce, then revalued it to $35. Instant devaluation of the dollar. Fast forward to 1971. Nixon closed the gold window, defaulting on the U.S. promised to redeem dollars for gold internationally. That kicked off the modern fiat era. What happened next? Gold ran from $35 to over $800 in a decade. And now here we are again, 50 years later, with the dollar backed by nothing but debt and gold pushing toward new highs. Are we really going to pretend that this is just coincidence? What we're witnessing now is the silent setup for the next great monetary pivot. And while most of the public is glued to their screens watching tech stocks, the chessboard is being rearranged. I said it before and I'll say it again. Central banks don't repatriate their gold unless they expect the system to fracture. They don't classify gold as a Tier 1 asset unless they plan to use it. And they don't accumulate record amounts of metal while simultaneously dumping treasuries unless they see a tectonic shift on the horizon. These aren't signals, they're sirens. Now let's talk about what that shift might look like. There's a lot of speculation, but one scenario that keeps coming up, and one I think has a lot of merit, is the revaluation of gold as a way to restore balance sheet integrity. Think about it. The US is drowning in debt, over $34 trillion and counting. Tax receipts can't keep up, and deficit spending is accelerating. Entitlements are growing, interest payments are exploding, and confidence in the treasury market is weakening. What options does the government really have? Raise taxes? Politically suicidal? Cut spending? Good luck. Default? Catastrophic. Inflate the debt away? That's the path we're on, but it has limits. So what's left? Revalue the assets. And the biggest unmarked asset on the U.S. balance sheet? The gold in Fort Knox, still marked at $42.22 an ounce. If that gold were revalued to even $5,000 an ounce, the U.S. Treasury could book over $1 trillion in asset value. At $10,000 an ounce, it's over $2 trillion. At $50,000, the national debt starts to look manageable again. And here's the kicker. This doesn't require new taxes. It doesn't require legislation. It's simply a change in accounting, a stroke of the pen. That's the kind of elegant financial engineering that politicians and technocrats love. Now, of course, such a move would have global repercussions. If the U.S. moves to partially back the dollar with gold, or even begins issuing gold-linked bonds, the entire monetary landscape would shift overnight. Confidence in fiat would be shattered. Precious metals would soar. Central banks holding gold would gain instant credibility. And those without it, well, they'd be left scrambling. In that kind of environment, gold wouldn't just be money, it would be power. And silver. Let's not forget about silver. If gold is the monetary anchor, silver is the monetary accelerant. Silver has historically outperformed gold in bull markets because of its smaller market size, higher volatility, and dual role as both a monetary and industrial metal. In a true monetary reset, silver could go parabolic, not just because of retail demand, but because of its critical role in technology, energy, and defense. And when you combine that with 7 straight years of supply deficits, it's not hard to see a scenario where silver becomes not just a monetary asset, but a strategic one. The writing is on the wall, Jesse. The debt is unpayable. The dollar is unsound. The system is unsustainable. And the only entities preparing for what's coming are those with the resources and the foresight to understand history. Everyone else? They're stuck in a dopamine feedback loop of stock charts and crypto tweets, hoping for another all-time high. But hope is not a strategy. This is why I keep pounding the table on physical metal, not ETFs, not mining stocks, not leverage, physical, in your hand, in your vault, outside the system. Because when the reset comes, it won't be advertised. It won't come with a countdown clock. It'll happen on a weekend with emergency meetings behind closed doors, and Monday morning we'll all wake up in a different monetary reality. The people who own gold and silver will survive it. Everyone else will adapt, or they won't. So let the pundits laugh. Let the algorithms chase momentum. Let the retail crowd pile into the same 5 tech names like it's 1999 all over again. I've seen this movie before, Jesse, and it ends the same way every time, with a crash, a bailout, a currency devaluation, and a mad scramble for real assets. This time, the scramble will be global. The stakes are higher, the players are bigger, and the consequences will be generational. My message to anyone still listening is simple. Prepare now, while premiums are low, while inventories are still available, while you still have a choice. Because when the time comes, you won't be able to buy peace of mind. You'll only be able to regret that you didn't. Let's keep watching the signs, Jesse. Let's keep speaking the truth. Because someone out there is going to hear it. And when they do, they'll understand that this isn't about price. It's about freedom. Real money is the foundation of real liberty. And that's why gold and silver matter more today than ever before.
Stay informed about the latest developments shaping the precious metals markets with regular updates from the Finance Daily team. Not only that, but as a subscriber, you'll also receive timely silver and gold price notifications and early access to groundbreaking news unavailable to the general public. Join our free gold and silver newsletter today, link in the description.